Hi friends! Now that we've learned how to record a journal from the different source documents, we will proceed to the next step in the accounting process, that is, recording these journal entries into ledgers. If you have doubts about the journal, I highly recommend you first view the sessions on journal and then come back to ledgers. So speaking of ledgers, what is a ledger and why is it important? A ledger is the principal book or file for recording and totaling transactions and for knowing the closing balances in each account. It's a permanent record of all financial transactions in a more classified manner. It is where we can find the summary and balances of any account, all in one place. Without having ledger accounts, we cannot proceed to preparing the trial balance and the final statements which help in analyzing the company's financial position or the status. So that is why ledgers are important. As we can see, this is a ledger and we have multiple account titles or heads here. Each of these is called as a separate account. Each account here has the same format. The left side of the ledger is the debit side and the right side is the credit side. We also see a journal folio or JF column where we write the page numbers of journal from where the original entry is taken. This helps in cross-checking the entries. So firstly, preparing ledgers. We can mark from all our transactions the different accounts that are needed and then prepare specimens for them like we have done here. Each ledger account is given a folio number. Now these are the journal entries that we posted earlier. From these journal entries, we are going to post them to their respective ledgers. The first one is Daniel introduced cash into business. The entry was cash account debit to capital. This is how we read the journal entry. So we will go to the cash account and write on the left hand side, that is the debit side, to capital, 8,000. On the left side, cash account debit to capital. So why is cash account debited? Here cash is coming in as we are introducing capital. So we will have to mention capital account. So to capital. We need to put a date here. We generally write the year on top once and then April 1st, and we can fill the JF by putting the page number of the journal entry. So let's write 1 for reference since it is taken from the first page of our journal. Now to give the second effect, credit capital, we will go to the capital account and then we have to give credit effect. So this time on the right hand side we will write on first by cash account 8,000. One thing that we said before in a journal session was we will explain what the LF column was for. So once we post a transaction in the ledger account, we have to go back to our journal and on that entry we write the respective ledger folio number. This is done so that we don't miss recording anything, or if we make a mistake, it can be easily corrected in the interrelated books. Let's see the next one, purchased goods in cash. So purchases account debit to cash account 2,000. Now how do we write this? We go to purchases account in our ledger and it is debited. So on the debit side, left hand side, we write the date and to cash. That's right. How much? 2,000. As we have purchased goods against cash. JF, page 1 since it's taken from page 1 of the journal. And now for our second effect, we will go back to cash account. And on the credit side, we write by purchases 2000, as cash is going out for purchases. On the debit side, we always have to something, and on the credit side, we always have buy something. And in the journal, write the ledger numbers. So hope you're getting the idea of how they are recorded. Now we will go a little faster as the procedure is the same. It'll be more easier when you try it yourself. You'll get the hang of it. So next is cash account debit to sales 1200. Just like we read the entry, cash account debit to sales 1200. And don't forget the date, that is April 3rd. Then the same entry in sales account, credit side, April 3rd, by cash account 1200, JF page 1. Then we fill in the journal. Next one, rent expense account debit to cash account 350. That is on April 5. We have separate ledger account for rent paid and rent received or interest received because they come from different parties and go to different parties. So we should keep that in mind, that rent received account is separate and rent paid account is separate. So for the second effect, on the same date, cash account credit by rent expense account 350. Next one is paid for printing and stationery in cash. If we don't have a printing and stationery ledger already prepared, then we will have to prepare it. And then post in printing and stationery account on the debit side to cash 20, and in the cash account credited by printing and stationery 20. So similarly, we have recorded ledgers up to date 19. Now this entry is a bit different. It is a combined entry, cash account debit 900. So we go to cash account debit to sales 900, not 1000, because the 100 is debited to discount account. So let's go to the discount account on April 19, debit to sales account 100. And now we will go to the sales account, and on the credit side on 19th we'll have by cash account how much? 900, and by discount 100. Then again normal posting. Here on 24th we again have a combined entry, purchases account debit. What should we write here? To cash 675, to bank 675, and to Ronald 1350. Now we have to go to each of these accounts and credit them. So in cash account, we'll write by purchases 675. Then we'll go to the bank account, by purchases 675, and then in Ronald's account, by purchases 1350. So in the same way, we recorded all the other transactions. Now we have finished the posting part. We shall now see how to close each account. We start to total on both sides. Let's write the amounts temporarily. The heavier side is written on total side, and the difference on the other side is written as balance carried down. In the next accounting period, this amount will then be the opening balance of that particular account. And it comes on the other side as balance brought down. These are some examples. Let's do the same thing to all the other accounts. Close this, totaling. By balance carried down, and for the next month, to balance brought down. This balance represents the amount Nina owes to us. She is our debtor. So that is all for today. Hope you've enjoyed the session. Give it a like so that we know you're liking our videos. Do share them with your friends, and you can leave in any queries in the comment section below. Thank you.